This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services, member FINRA, and SIPC.
Good Sunday morning. This is Bud Hettinger. Next on News Radio 102.5 WFLA, the longest-running radio show in Central Florida, Dollars and Cents, with my good friend Joel Garris from Nelson Financial Planning. You can call him at the office this week at 407-629-6477 to schedule your free consultation to discuss your retirement plans. Or you can talk to him right now at 407-916-5400.
Well, good morning, ladies and gentlemen, and welcome to the program Dollars and Cents. My name is Joel Garris of Nelson Financial Planning, and for the next hour here on News Radio 102.5 WFLA, it's the program we all know and love, Dollars and Cents, where we help you make sense out of all of those different things that have anything and everything to do with your dollars. On tap today on the program, we're going to talk about 5 things to look for in the current year, in 2018. Certainly hard to believe we're not even 2 months in, but there's been a lot to talk about from a market perspective, right? I mean, January, the markets went basically straight up, followed by, you could say, straight down with a couple of 1,000-point drops there at the beginning of February, but then a recovery, if you will. Now, not back perhaps to the peak of where things were in January, but at the end of the day, if you're looking at your performance, a typical blue chip, large company-oriented fund, that category is probably up around 2 or 3% if you own a diversified mutual fund. So, I mean, shoot, 2 months in, you're up 2-3%, maybe a little bit better depending upon what you own. That's not bad, right? That's not bad. But certainly there are some themes to continue to look at and to think about as we look forward to the rest of the year. So we'll talk about that. Also talk some taxes. I mean, hey, here it is, right? I mean, this is kind of the peak period of time when people are really getting their act together on taxes. We got an article that we posted on our social media, our Facebook, our Twitter, all that good stuff. What else is out there? Facebook, Twitter, and LinkedIn. And it's an article courtesy of LegalZoom.com that is 9 helpful tips to get organized for tax time. So we'll talk about that because that's pretty much on point. Starting to really kind of look at final versions of tax returns at the office. And it is interesting to see when you start to put the lens of 2018 on it. Obviously, 2018, big changes. Biggest one, well, there's a bunch of them, really. I mean, the biggest one is obviously that standard deduction being much higher, which sort of eliminates the need for you to have to do all of that work associated with adding up all your medical expenses, your charitable stuff, all that. You just don't have to worry about that as much as you may have in the past because the standard deduction is going up quite a bit for 2018, effectively meaning that there's no sense putting that extra work in because if you do, it's just for nothing because you're going to wind up with the standard deduction. And then if we have time on the program today, we will talk a little bit about the Florida prepaid plan. This time of year when it's open to be able to participate, gets a lot of interest. We thought we would talk a little bit about that and ultimately how the numbers work out. I had somebody chat with me this past week. They had called to get some information on the Florida prepaid, and then they called me and they said, well, I have these numbers. Let me make sure I'm doing them correctly and that they really are looking like I think they look like. And we agreed on that his analysis was correct. Unfortunately, the analysis not a very high effective rate of return on that stuff. But so anyway, those are the topics du jour, if you will. But of course, we are a live call-in radio program, so we would be remiss if we did not talk to our live caller-inners, specifically George and Christmas. Hey, George, how are you?
Pretty good, Joel. How are you today?
I'm doing great.
I've got these allergy problems, and oh my!
Yes, I have.
It's bad.
I have an avocado tree in the backyard, and I was looking at it the other day, and I'm like, that thing is just completely fully in bloom. So hopefully we'll have some good guacamole in the fall.
Yeah. Well, first time in a while, I find myself owing taxes. Can I electronic file and then send a check to the IRS, or do I have to paper file when I do that?
No, there's no need to paper file. Paper file is less and less, and the IRS likes it less and less, and frankly, it takes them longer to process it. So electronically filing you can do regardless of whether you owe or whether you are getting a refund. You can also set up that refund or payment to go automatically through your checking account. Now, certainly we've had conversations with people in the past where they're a little bit comfortable with giving the IRS their bank account number and routing number, to which I respond, they pretty much know everything about you anyway. So I'd get over that, but because it just makes it simple, and that way it's going to happen sort of automatically. And what we do in the office, George, is if you get a refund, you're getting that right away. But if you owe, we set it up to debit that checking account on the last day possible, which this year, by the way, is April 17th. It always seems like every year it's never really April 15th because of this autumn emancipation holiday up in Washington, D.C. that is technically a federal holiday. But it is April 17th. So we set it up. If you owe, you're going to pay at the last. Our philosophy is pay at the last possible day.
Okay. So it's just put the account number on the when I file, just as I did when I got a refund.
Right.
But they'll just take money instead of giving me money.
That is correct. Yep. Just put the account number and the routing number in there, and they've got a process where the routing number typically will get confirmed. Make sure it's the same bank as what as the routing as what the checking account is on. But yeah, it works either way, whether you're getting a refund or whether you owe money. I would imagine, George, what you ran into is something that we're seeing on a somewhat regular basis. Obviously, last year was a good year for the markets, which means that your dividends and your capital gains went up, and that is often a factor that's shifting the returns from where they were the previous year.
Yes, that, and I'm taking more out of my my retirement funds,
and that will do it. That will
taxable.
Correct. That will do it. That will do it as well. That's for sure. But yeah, for folks that didn't see a change in their income, there is a bit more capital gains and dividends. So we certainly want to mention that to our other listeners, because there will be a change when you do your taxes. So just kind of the good news, bad news. Good news is last year was a pretty good year for the markets. Bad news is, well, you're going to have a little bit more taxes you got to pay on it.
Well, I don't mind paying taxes. It means I made money,
Correct.
Not too bad.
Those usually are a combo type of situation. That's for sure.
Mm-hmm. Okay. Thanks a lot, Joel.
All right. Very good, George. Thank you for calling on in, and enjoy the rest of the beautiful Sunday out there. Holy mackerel. Looks like it's a beautiful day out there. We will slide to a break. We get back from the break. We'll talk about some of the key things to think about in the road ahead for 2018 here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning on News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Hey, welcome back to the program, Dollars and Cents, here on News Radio 102.5 WFLA. This is Joel Garris of Nelson Financial Planning. George got us started, so you are welcome to join in as well here on the call-in radio numbers 407-916-5400, toll-free 1-855-545-1025. This part of the program, we're going to talk a little bit about some themes for 2018, and some of this, well, probably all of this, we've certainly hit in prior shows, but I wanted to kind of pull it all together in kind of one conversation because these are some of the reasons why we remain positive about the year going forward in terms of what the economy and the markets should do. And first and foremost, it really does have to deal with the global growth that is synchronized, that is occurring across the entire globe. For many years post 2008, it seemed like only the U.S. was kind of the one that was growing, and everybody else was still struggling. That tide, if you will, has changed to the point where the rest of the major economies, like Germany, like Japan, like United Kingdom, are all very much in a synchronized global recovery mode, and that even extends to China as well. So that's kind of the key part, and then. If you look at where our economy is, and you hear a lot about this, that it's been a long time since we've seen any recession. I mean, 2008 to 2017, that's a long period of time. But I think the important thing to think about is what's been the cumulative economic expansion, and that number, in fact, is lower than what you would think. Despite this being perhaps one of the longest period of economic expansion, on average, coming out of a recession, your economy expands to 123% of the prior peak. That's sort of the average look at what a recovery is when you look at the economic numbers. At the end of 2017, this had only the current economic expansion had only gotten to about 115% of the prior peak. So yes, it's long, but in terms of the economic output, it's still below average. So again, some things to kind of think about. We got a couple more things to hit in this conversation, but we never like to leave people on hold for long. So we'll go to Mike in Orlando. Mike, good morning. Welcome to the program.
Hey, Joel. Thanks for taking my call. Hey, you're kind of just touching on it there, but I just wanted your feelings or your guess on U.S. markets versus international markets for 2018, and also the large caps kind of way outperform the medium and small caps in 2017. Do you think they will start performing better, or is it going to be mostly large caps still? What's your feeling on that?
Yeah, great question, Mike. I mean, I think when you look at what's going on around the world, you're having this sort of this global recovery, and it's now relatively synchronized. So in that environment, your larger names, your global brands are going to be able to see that. I would be tending to lean a little bit more on the large company side of things. That's also my personal preference anyway, because larger companies have a little less volatility than, say, those smaller companies. I mean, obviously, there's a classic risk-reward trade-off on that, but I like the notion of owning more large blue chip and less on the bond side, because I just think you're going to get a better return over time with that mix. So my personal predilection is always large companies, but I do think as the global economy continues the recovery that it's on, that those companies will do better. A lot of economies out there in the world are finally shifting, I guess, into a full gear of recovery. So I would wait a little bit more on the international side. Typically, our investment approach is to be 20 to 25% on the international side. Today, we're probably running closer to maybe 30%. So we might be bending a little bit more on the international side to take advantage of that. Still, Mike, you want to be diversified. I mean, I wouldn't put 100% of the portfolio in international, obviously, but I might weight it a little bit more. And when you look at the earnings numbers that are coming out, that just came out, for the quarter that just ended, you're talking almost 15% year over year growth in earnings. And those earnings don't have the tax cut in them yet. So we're positive for the markets and the road ahead. I don't think it will be as smooth as last year. Last year was a abnormally smooth year in terms of the markets. Really no volatility at all on the downside, which is historical in nature. And I think you'll see more of kind of the weeks like that first week of this month where volatility kicked up and caught everybody's attention. That's really more of how the markets work. Is you have those periods of time, where you've got the negative volatility. So, so I think the year will be good. I don't think it will be as good as last year. Because I think last year was anticipating some of this economic improvement that we're seeing in 2018.
Okay. I appreciate it. Thank you very much, Joe. You answered my question.
All right. Very good. Excellent. Thanks for calling on into the program, Mike. And that obviously frees up a line for somebody else. So 407-916-5400, toll free 1-855-545-1025. To continue that conversation a little bit with Mike and sort of the themes that we were talking about, I think the important statistic, the one that we were just talking about, is you hear a lot of people talk about, the length of this recovery. And yes, it is historical in terms of the length, but it is below average in terms of the economic output that has been added to the economy over that period of time. When the average economic expansion in a recovery is 123% of the previous economic peak, and you're only at 115%, to me that says that it doesn't necessarily matter how long the recovery has been, but rather what's been the quality of the recovery. And the same can certainly be said for over in Europe as well. Europe, we talked a little bit about earnings here in this country growing by almost 15%. For the companies over in Europe, you're talking about earnings growth of over 20%. So they're really starting to accelerate their earnings over there, and so consequently, I bend a little bit more closer to the 30% on the international side to take advantage of that. I mean, you stop to look at even a country like France, where their economy has gone from being very stagnant to really booming as a result of just different leadership over there. So it makes a difference. Similarly, with the emerging markets, we talked a little bit with Mike about the large company aspect of that. Large companies have the ability as a global brand. So think like a Coca-Cola or a Microsoft or even an Apple. I mean, those are global brands that are everywhere. So when you look at these emerging markets, you're really looking at a dynamic of a much greater portion of the population that now is showing that they've now got some economic clout. They now got some money, some disposable income, and that is probably where sort of the middle class. You hear a lot about how the middle class here in this country is not expanding as much as it used to. Part of that is because the standard of living in this country is so much better than the vast majority of other countries. But certainly in large parts of the rest of the world, where you're in sort of the more traditional emerging markets like in India or Brazil, you've got a renewed renewed economy that's helping to generate additional spending by consumers, and ultimately those companies that are those global brands should do better in terms of capturing more of that disposable income that now exists in emerging markets, where before it did not exist as much. I mean, it was obviously not there because there wasn't the disposable income. And then lastly is obviously the conversation about rates and interest rates. That was probably a big driver of the negative volatility that happened at the beginning of this month. Concern that interest rates are going up, affecting bond prices, in fact, affecting inflation, affecting the speed at which the Federal Reserve would raise rates. The answer there is that we certainly could see where rates would be lower for longer in terms of how those rates will effectively climb, simply because there's still a tremendous demand for U.S. Treasury debt out there in the world as a whole, because we're paying a little bit better interest rate than pretty much everybody else. So those are just some of the things to look out for 2018, some key themes, if you will, that we expect to sort of see develop along the way as the year progresses. So we will slide to a break because it's the bottom of the hour and we're supposed to take a break. So we will do that. When we get back from the break, we'll talk about some of the things that you can do to start to get organized, if you haven't already. Hopefully you have been, on your taxes here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning. Also have open lines, 407-916-5400. Toll free 1-855-545-1025. The numbers to call in here on News Radio 1025 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Hey, welcome back to the program, ladies and gentlemen. Dollars and Cents here on News Radio 102.5 WFLA. 5:40 a.m. for you old school folks that are listening to us on the AM dial. Numbers to call on in and be a part of the program. George and Mike got us kicked off here in the first half. 407-916-5400. Toll free 1-855-545-1025. This part of the program, we're going to talk a little bit about the article that we posted on social media a few days ago whether that's on our Facebook page at Nelson Financial Planning or through Twitter at Nelson Financial Planning as well. It's just some tips, if you will, this time of year. It is, of course, tax time, and that means you need to get organized first before you can do your return. It'd be very hard to just sit down and start doing the return if you didn't have all of your information organized. So the article we posted through the social media comes to us courtesy of LegalZoom. Got some good stuff in it, and we'll just hit a few of them. And if you're interested, you can certainly go to the social media channels and check out the article for more information. Obviously, first and foremost, make sure you know that the deadline is April 15, except that it's not. It's April 17 this year. But so know that you've got an extra couple of days. Most of your forms you should have received by now. The W-2s, the 1098s, the 1099s, all of that stuff it has a deadline to be mailed on January 31st. So by now you should have got most of your tax documents already. And then you need to figure out how you're going to file your tax return, right? Are you going to go see somebody, a tax preparer, or are you going to try and do it yourself? But one suggestion that I would make is you really almost have to do it electronically. You have to use some form of a software. I get that there are some still out there that do it by hand. God bless you for that. But that's a great way to make mistakes, because so much of the tax rate that you pay on certain income depends upon how much other income you have. So think about the different rates that apply for qualified dividends, or the different rates that apply for long-term capital gains, or the differing amount of your Social Security that can be included in your taxable income. All of that is some convoluted formula stuff that yes, you could certainly figure it out if you were doing it by hand with a paper return, but let's face it, the electronic way that kind of does all of those calculations automatically is probably a little bit better way to ensure a higher level of accuracy. Some other things to think about is your filing status. So, if you're married, you're going to do a joint return, you're going to do a separate return. Generally, there's not a whole lot of difference. Usually, you're better off on a joint. There are some very unique circumstances involving things like liability, one party having more deductions than the other, things like that, where you may glimpse at the separate filing status just to see, but highly unlikely. That may change a little bit for 2018 and beyond, simply because of some of the preferential tax rates that apply on business income. You may, in fact, be able to pick up those preferential tax rates better by doing a separate return, assuming that the business side is just in one person's name. So I think that becomes potentially a little bit more of an issue in 2018 and beyond, and thinking about your filing status and how best to take advantage of that. If you've got a business, there may be a little bit more of a reason to kind of check and compare on that. And certainly from a tax perspective, a lot of new rules out there, a lot of new information. So just be aware of those changes. Again, that's why using some type of a software, whether it's online or, one of the I think most of it's probably all online now, up in a cloud somewhere, to use that to help ensure a little bit better accuracy on it. But anyway, so if you're interested, the article is entitled 9 Helpful Tips to Get Organized for Tax Time, courtesy of LegalZoom, and it is posted on our website if you want to read it and check it out more. So we've got open lines, and so we'll give out the numbers, and then we'll shift to an early break. And then when we come back, we will talk a little bit about the Florida prepaid plan here on the program. So the numbers to call on in and be a part of the program are 407-916-5400, toll free 1-855-545-1025. If you're feeling a little shy, don't want to get on the air, you can always send us an email. That email is just my first name, Joel, Joel, at NelsonFinancialPlanning.com. So NelsonFinancialPlanning.com. That's how you can send us an email on the program this morning. So we'll slide to the break. When we get back from the break, we'll take your calls, and we will also talk a little bit about the Florida prepaid plan here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning on News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
That's right, Bud. The numbers to call on in and be a part of the program, 407-916-5400. Toll free 1-855-545-1025, or the email Joel at NelsonFinancialPlanning.com. So during the break was gearing up for our topic at hand in this segment, which is the Florida prepaid plan, and we'll do some comparing and contrasting of that versus the other options out there like 529s or educational savings accounts. And it struck me that my kids are definitely getting older, and the time for college is rapidly ticking and approaching, and that became particularly abundantly clear after last night, which we had the opportunity to go to a school fundraiser that will, I guess, be the last one, although I'm sure we'll go back from time to time, but the last one where I still have kids at the school. So it's an elementary school. It's the Christ School located downtown through the First Presbyterian Church there. And so my kids have all gone there. They've all graduated. The last one, Connor, is set to graduate. I believe he's set to graduate. He's not doing maybe having some problems on some classes, but he'll make it through and graduate in May. So then that will mean that now my kids will be in high school. So that will be a bit of a change. So obviously, as I'm sitting here during the break talking about college stuff, that's right around the corner. And last night at the charity event for the Christ School marked a little bit of a changing of the guard, if you will, since we will no longer have kids there anymore because don't have any younger ones. Connor's the youngest, and there's not a fourth one on the horizon. So there you go. I can barely keep up with the teenagers, let alone a newborn. Anyway, so this time of year you hear a lot about the prepaid plan, and we'll just set the table first by doing a little bit of comparison between the different options that are out there. The prepaid plan is basically what it says. It operates much like any other prepaid plan, which is that if you pay the set fee now, then you will get a benefit later. And depending upon the gap between how old that child is versus when they're going to go to school, if the gap is larger, then you don't have to prepay as much. If your gap is smaller, meaning that they're only a few years away from going to college, then obviously that means you've got to pay more proportionately on those types of plans, or you can decide to put the money in over time. So that's one option. The other option is an educational savings account, and we're going to actually kind of group educational savings accounts with 529s for the purposes of the conversation, because both of them act the same way in that when you put the money in, there's no tax deductions, no tax benefit today. And by the way, that same thing is true on a prepaid plan. So you're not saving anything on your taxes today. In some states, yes, there is a state income tax deduction that you can take advantage of. That is obviously not the case here in Florida because we don't have a state income tax. But certainly if you're living in a state where there is a state income tax, you may want to look specifically at a state-offered plan to pick up whatever state income tax deduction may be available to you. But here in Florida, it doesn't really matter. So bottom line is when you're looking at a savings plan like a 529 or an educational savings account, you really want it to come down to performance. So look for the best possible performance options that you can get on those types of plans. When the money goes in, no tax deduction, but the growth is tax-free when used for educational purposes. If it's not, then you've got to pay taxes and a penalty, but the reality is that the growth is the part that misses taxes when it's used for educational purposes. So in a lot of ways, the 529s, the educational savings accounts, from a tax nature, sort of look a little bit like the Roth, right? I mean, you put after-tax money in, you get it out tax-free. If you're using an educational type of an account, then it's got to be used for educational in order to get the tax-free part. The big difference between the educational savings account and the 529 is just simply the amounts that you can contribute. There used to be bigger distinctions, but those disappeared. One of the big distinctions was that the educational savings account could be used for private high school and private elementary. That is not the case anymore because in the 2008 tax changes, you can now also use a 529 plan for private elementary and private high school. So that distinction sort of has disappeared. With the educational savings account, you are capped at how much you can put in at a much lower level. $2,000 is the maximum per year on an educational savings account. 529 account, you can actually front load 5 years of the gifting limit. So the gifting limit for this year is $15,000. So 5 times 15 is $75,000. You could literally front load a 529 account in. On the savings types accounts, whatever the money is, that's how much you get to use towards various college expenses. On a prepaid account, it's really that you're prepaying whatever piece of the pie that you are buying. And let's be very, very clear on how the prepaid plan works. It's really kind of a menu where you're picking and choosing what feature of prepaid you want. So maybe it's tuition, or maybe it's room and board, or maybe it's the fees. But the prepaid plan itself, even if you buy all pieces of the pie that are offered, still does not cover all college expenses. If you look even at their numbers, they approximate it to cover less than half of the total college expenses. So surprise, if you're doing a prepaid, it doesn't mean that school is not going to cost you anything out of pocket. There's always going to be something. And so the prepaid plan just covers those pieces of that prepaid plan that you, in fact, purchase. So you have to be aware that there's going to be more to the story when the kids get to college. And certainly there's a bit more flexibility in terms of how the savings plans, the 529s, savings plans ultimately work out, because then you know the dollars that you've got to work with, and you've got a lot more flexibility if your student goes out of state. A lot of the prepaid stuff is very much geared to staying in Florida. If the kid decides to go out of state, then you don't get much in terms of the return of those dollars. And then I had someone give me a call this week and give me the numbers on it. And here's the numbers. So he has a newborn, was looking at doing the prepaid, and said, okay, so it's an 18-year proposition. They are looking for a $29,000 lump sum to basically get what they say is going to be a $50,000 benefit. So let's just look at those numbers real quick. So if I put $29,000 in, I'm going to get out a benefit of $50,000 later. That later is 18 years. You start to run the math on that, and very quickly you should be able to figure out, hey, wait a minute, that's only about a 3 or 4% return. So that's a pretty low number in terms of your return. And one of the problems or one of the issues with the prepaid approach is that you're not getting as good a potential return as you could be if you were on the savings side of things. The other interesting number that he shared is if I pay it monthly, right? The reality is that, and I added up, over the 18-year period of time, I will pay $42,000. He had done the math in terms of what the monthly amount was, and he had taken the monthly amount and obviously multiplied it by the 18 years, and the number came up with $42,000. So you're going to put $42,000 in to get a $50,000 benefit. Again, we start to really parse the numbers. It is what it is, just like any other prepaid type of plan. You're basically getting inflation plus a little bit more in terms of your effective rate of return. So we encourage folks to make sure that they are comparing and contrasting these options appropriately, looking at the prepaid, but then also comparing that to the savings options that are available out there, specifically the college savings types of plans, the 529. I guess they're basically both 529s. The question is whether they are prepaid or whether they are a savings-oriented one that is more focused on the investing side of things. We think between the two, particularly if there is some space and time between when the child is, how old the child is, and when the child is going to college, that those savings accounts are a bit better option than the prepaid. And certainly when you hear these numbers, $29,000 for a newborn to get a $50,000 benefit 18 years later, those aren't particularly great numbers. Similarly, the $42,000, if you decide to do it monthly, that doesn't kick in a whole lot of extra gain, if you will, on that money. So certainly something to think about as you're looking at the different options that exist out there for college and college funding. We are about out of time on the program, so we will begin to wrap up. If you missed any part of the program or would like to catch it again, we will be posting it on the various social media and internet channels tomorrow, which is normally the case. And so look for that. Also, in the interesting article that we talked about on the program, some strategies to start to get organized for taxes. It is, in fact, that time of year where you've got to start doing that. Otherwise, you're just going to fall behind on it. And you want to be organized when you do those taxes. That is for sure. Otherwise, you'll miss stuff. Anyway, we are out of here. We'll wrap it up. Thank you all for listening. Thank you all for tuning in. Thank the callers, Mike and George, for participating. This is Joel Garris of Nelson Financial Planning. You've been listening to Dollars and Cents on News Radio 102.5 WFLA.
This is Bud Hedinger. And you've been listening to Dollars and Cents with Joel Garris of Nelson Financial Planning. If you missed any part of today's show or want to listen to it again, check out the radio show at www.nelsonfinancialplanning.com or connect with them on Facebook or Twitter. Be sure to call Joel this week at 407-629-6477 to schedule your free consultation to discuss your retirement plan.
Fees, commissions, expenses, investment costs come in all shapes and sizes. Do you know how much your investments are really costing you? At Nelson Financial Planning, we believe that costs should be a major consideration in your financial plan. After all, the lower your costs are, the more you get to keep for yourself. This is Joel Garris, and I invite you to get educated about your investment costs. Visit NelsonFinancialPlanning.com or call us today at 407-629-6477 to set up a personal conversation to review your investment costs. That's NelsonFinancialPlanning.com or 407-629-6477 to set up that conversation.
A-plus Better Business Bureau accredited. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services. Member SIPC at FINRA. Listen to Joel Garris on Dollars and Cents every Sunday at 9 a.m. on News Radio 102.5 WFLA. This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services, member FINRA, and SIPC.